Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, friends. Ira Epstein of Linn & Associates with your metals market update. And this is for Thursday, the 5th of October, 2017. It's after 2:10 p.m. Central Daylight Time. Gold can't withstand this roaring dollar. The market is looking at good trade data, a smaller deficit than a lot of people thought was going to take place. We get jobs data tomorrow that the market is seemingly brushing off, saying it doesn't matter if it's good or bad. It's affected by the hurricanes. The market's getting comfortable with the idea the Fed can raise interest rates again, and it is a nonstop rally in stocks. How does gold fight that? It doesn't. It's that simple. Ask you another question. When's the last time you heard about North Korea in the markets? So that story's come out since China has basically shut off the banking system, or at least said they were shutting it off. Dollar has gone up. We're hearing that the European Central Bank right now discussed at their last meeting, and this according to their notes and leaks, as I like to call it, that are conveniently placed, that, gee, come October 26th, the next meeting, are they going to say, okay, we're going to end the $60 billion a month in purchases, but in 2018 we'll do $40 billion a month for 6 months, or as other stories are saying, maybe it'll go down to $20 or $25 billion a month for a whole year. But it's already floating out in the market, and it's putting pressure on the euro. We've seen that news on the yen, where it's not going anywhere. The British pound's got the same type of story with the Bank of England floating ideas, and the dollar getting the benefit of what right now? The idea that the market's comfortable with us raising interest rates. Not a good story for the gold from a fundamental point of view. From a chart point of view, the market had its rally, has come back down. For the week, it's down about $13.90, trading against this 18-week moving average of closes. When we come to a daily area chart of closes, I'm not certain where the market finished today. It didn't matter to me. It just kept falling as we got past 12:30, and it's done so. These new lows were made not even a half hour or so ago. Is it going to be around 1270.60? It could, but the market's through this 1274.60 level, which keeps this thrust going down, and it's been one heck of a break. We'll see where it might go in a moment here. And the word is might. I don't know. When we look at the market, you can see how well-defined the downtrend is. You keep going sideways, and then you push to new lows, the way you did it here. You're doing that over and over, and you see that much clearer when you look at swing lines. Because what a swing line does is, by the way, I created this indicator. And what it does for me is I'm able to see peaks and valleys in a very certain way. You know, the hardest thing about being a chartist, you read something in the newspaper, you look at a pattern. Oh, gee, that could be a bullish pattern. Oh, gee, that could be a bearish pattern. I like quantitative sometimes, and that's what I did with this study. It either is in a trend or it isn't in a trend. If you define a trend as lower highs, lower lows, that's a downtrend. If you define an uptrend as higher lows, higher highs, that's an uptrend. No trend has a higher high and a lower low. How do you end a trend? You end the trend by taking out a previous high in a downtrend. So that's the number you'd be looking at, 1285. Okay, so the risk if one were to go short here and they said, what number would take me out of the trend on the swing line basis would be over 1285. That's as simple as I can make it. Now, one of the things I told you is the market seems to be fighting here at the 100-day average. I have not put the 200-day on, but if you put it on, you're getting towards it, and the Bollinger Band keeps falling lower towards 1261.20. This market's got its hands full, and guess what number's accompanying it and pushing it lower, or saying momentum is pushing it lower? The slow stochastics. And what slow stochastics are is a momentum oscillator. They often travel traditionally between 80 and 20. Any number in the traditional manner over 80 is said to be getting overbought, any number under 20, oversold. In my charting course, I teach a whole different way to look at it. And yes, I was friends with the man that developed slow stochastics. I showed him when he was alive what I had thought of with it, and I took it to what I thought was a different level, and I'll stay with that. The trend is locked into the bear side, and with that, the market just is coming down. Get the red line over 20, and that'd be a sign the trend has not only weakened, maybe it ended, and the market gets a short covering rally. Hasn't done that. We go to the gold ETF, embedded reading, stalled out at the 100-day average, starting to slip again. If it drops, maybe the lower Bollinger Band becomes that number. What's interesting here is if you get over 120, 127, you will break that pattern of lower highs and lower lows. But more important to me is the market didn't have a trend until today on the swing line. It got it because you slipped under yesterday's low and the downtrend kicked in. So it's a new trend. On the GDX ETF, because you lost the embedded reading, I often look for price and the 18-day average to come together. I haven't changed my mind. They don't have to do it in the same day that it occurs. So I'm saying this market has upside momentum, prices under the 18-day average, downside bias, and it is not trending because it's got a lower and low and a higher high. Remember what else I said? Gold mining stocks often, that is not the word always, I'll use the word often, lead the futures markets. We'll see if they do this time. We're still drifting what I'll call sideways in the gold-silver ratio. And yes, today silver was a bit stronger than gold, and you can see that. But I don't think that's a breakout of this sideways action just yet. Let's see if it does it in the next couple of days. That would give you another idea of the weakness in the gold market. Copper exploded to the upside today, and I think to a degree that helped the silver market, as copper is the doctor of industrial metals. It gives you an idea as to what is going on, how people feel about industry. Well, silver is used in a lot of industry too. I'll tell you what bothers me about silver a heck of a lot. The 18-day average is quickly getting down to that 100-day. You could get a bearish crossover, which is not bullish. When we go to the copper market, a whole different look. Up until today, look at how this market was just drifting around. I had pointed out it was having trouble fighting at the 18-day average of closes. The trend in terms of the swing line was up, but prices had closed underneath the 18-day average of closes. Therefore, the bias was down, and momentum was trying to turn up. Today, the market caught on fire. Goes up to the upper Bollinger Band, and as you can see, going to settle right around that number. Admittedly, it is overbought already in an uptrend. In the platinum market, it is higher. It made a low that challenged yesterday's low. It's still in a downtrend. What's the overriding factor if you were to be able to sit next to me and talk to me? You should be able to say that you got that embedded slow stochastic. That is very bearish still. Lose that, I'll have a different attitude. What else in the market? You had a bearish crossover of the 18 over the 100, and that has kept pressure on the market as well. The palladium market's in a different world. They often trade palladium versus platinum, and this market hasn't been trending. It's got a lower low, a higher high. It made a run for the lower Bollinger Band, missed it. Today it went up, challenged the upper Bollinger Band, just missed it by a fraction there too, and it's overbought. But it's staying in what we can see already, sideways Bollinger patterns. And when that happens, you get chopped up as the market just spins its wheel like that. And that's something to be cautious about. Dollar index, what can you say? We have said the market's challenging the upper Bollinger Band. It's got an embedded reading. The trend is up now with higher lows, higher highs, and it's been that way. If you can clear the upper Bollinger Band, the 94.20 level, the 100-day average is there, but the higher the dollar goes, the higher U.S. interest rates go. It's not a friend of the gold market. It's that simple. So gold needs a story, and it's certainly not able to compete at this point with the stock market, which at least pays dividends, and it keeps moving to higher highs. But a lot of this is covered in our good friend's publication, Modern Trader. Now, Modern Trader is not written just for futures traders. I don't want to give you that impression. Trade Forex, it's got it in there. Derivatives, it's in there. Stocks, it's in there. What about options? Options on futures and stocks. What about a trading pattern? Does it matter if it's a stock or a futures market? No. And their articles are fabulously in-depth. What they offer through us is a free 1-year subscription. You get everything by email, and they have a fabulous reader that you're able to read the magazine with on your computer screen. It's just so easy to read it. Yes, you can print it out, do whatever you'd want from there. To go along with it, you get the Market Focus Daily short stories. How do you get them? You can call us. We'll get you on the list. You can go to our website, sign up for it. The November issue is already out, by the way. If you didn't get it, you should get hold of us. Right up here, if you're watching me on YouTube, click this icon. The forms will appear. Or underneath us, it'll say, click here for Ira's free offerings. Do so. We'll be absolutely to put everything in your hands. With that, you can see how the markets are finishing, not finishing up, but where they're at as I'm finishing up. You have a good day, and I'll see you in the end of the day financial report.